This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore. Your top stories this hour. A positive lead-in for Asia, with Wall Street hitting fresh highs, driven by AI optimism and hopes for further Fed rate cuts. Japanese futures pointing lower, though, as China imposes military export controls. President Trump to meet energy executives as soon as Thursday to discuss Venezuela's oil industry, while refusing to rule out using military force to acquire Greenland. And with AI in focus, we speak with Samsung and Deep Robotics in a special edition of Bloomberg Tech Asia, live from the CES in Las Vegas. And we are expecting that AI optimism to perhaps follow through for yet another session. But what could derail this may be the mood tempered a little by these escalating China-Japan tensions. After already what was a really good start to the year for Asia stocks, the best start in a long, long while, we of course saw Japan, maybe when futures, we are pointing sideways for the moment. But we did see yesterday already gains helped along by the rally in material stocks as well as the bank names. JGB 10-year auction also drew pretty solid demand given relatively elevated yields. We are seeing in the early goings the ASX 200 a bit of a turnaround from yesterday's performance where banks led the way lower. We have an Australia CPI print for the month of November that is due in the next hour, expected to show a bit of slowing but still above the RBA's target, so might keep the central bank cautious for a while longer. Paul?
Well, it was another good day for US stocks as well. That AI narrative that you mentioned, Avril, just continuing to propel things higher. In some respects, though, we did see data center cooling stocks sinking following some remarks from Jen-Hsun Huang. We'll bring you some more on that in a moment. However, Sandisk, one of the stories of the day in the US trading, better by 28%. So we'll be keeping an eye on flash memory makers in Asia today as well once we get going. Bonds, meanwhile, not a lot of movement there. The 10-year still parked at 4.17. We did hear from the Fed's Stephen Meyer, and he's calling for a 1 percentage point worth of cuts in 2026. We have weaker than expected US services PMI data as well. That boosted rate cut hopes. And of course, later this week, we'll get the first clean jobs data reading since the shutdown in the US. Take a look at crude prices as well. We are pretty much back to where we were before that US operation in Venezuela. Chevron also gave up some of the gains it saw this week, perhaps as the realities ramping up oil production in Venezuela begin to hit home. But let's get back to those tech themes, and Nvidia shares closing a little bit lower despite US stocks hitting those fresh highs. CEO Jen-Hsun Huang told CES in Las Vegas that the company's already bullish revenue forecast has got even brighter due to strong demand.
Hopper pricing is actually going up in the cloud. All of the hoppers are consumed in cloud, and now spot pricing is starting to go up. And so that tells you about the demand that's being generated all over the world. So H200s, I think, is going to contribute also to that. And I think all told, I think we should have a very good year.
Bloomberg Tech co-anchor Ed Ludlow joins us live from CES now. And Ed, whenever Jen-Hsun Huang talks or Nvidia does something, markets sit up and take notice. And we saw quite a bit of market action off the back of some of Jen-Hsun Huang's remarks. Can you tell us a bit more about what he said?
Yeah, I mean, just on that clip there, that was probably the fifth time that he's spoken in the last 24 hours at the fifth different event. But it was actually an answer to Bloomberg's Ian King, who said that when they gave this forecast of $500 billion over 5 quarters for just Blackwell and Rubin, could that number get bigger? And so the clip that you just heard there was what Jensen was giving as evidence in why it could get better. Like, they're super bullish on demand. But if you look at the markets, you guys have done a really good job. You see storage memory going up. We're not talking about high bandwidth memory that goes around the GPU in the data center or the AI factory. What we're talking about is just literally storage of data. And, quite clearly, when there's a supply deficit and you have the CEO of Nvidia saying that it's in high demand, that's a positive. Where we saw stocks come down was in the cooling aspect. So in the Vera Rubin, which has been great to discuss with you guys over a couple of days, 100% liquid cooled, but the water that goes through it is like 45 degrees C. In kind of legacy data centers that are liquid cooled, you need super chilled water. So there's stocks that we see falling is because Jen-Hsun's basically saying we don't need chillers anymore, nor do we need fans because there's no air cooling in the system.
I haven't spoken directly to them, but ultimately, the way they'll communicate to us will be through the companies. If the companies are allowed to buy Nvidia products in China, then there'll be strong demand.
I think the one thing I point on that is in that clip he's talking about China, and for the Asia trade audience in particular, it takes two to tango. So we spent a lot of time in the last 2 days asking Jen-Hsun Huang, is the US supporting you with licenses to export to China? In that clip, he's making the point, they don't communicate directly with the Chinese government. They can only get a sense of the demand in that nation by the orders that are being placed by Chinese companies. So it's still a little bit in limbo in that market, guys.
Limbo in China, but overall it sounds like quite upbeat on demand. What is holding perhaps Nvidia back for this year then? Is that the energy aspect?
Yeah, I mean, gosh, we went into this week with very high expectations that Nvidia would say something spectacular. The generational jump from the Blackwell system to Vera Rubin, it is a sell to hyperscalers and the data center operators that use it because it's basically 10x more efficient, right? It has 10 times the throughput and can create a token or generate a token and at 1/10 of the electricity burden. And this was like the first opportunity I've had in a while to ask Jen-Hsun over a number of minutes, like, how anxious are you about the supply of electricity and energy? And, you know, he kind of downplayed it. The anxiety isn't really there, but there's an acknowledgement that the world is going to need all the power that it can get, irrespective if the systems are getting more efficient. And so this year, it would be interesting to see some more developments on that front.
Ed, great stuff. Thanks so much for joining us on the show today and putting things in context really for the Asia audience. Bloomberg Tech co-anchor Ed Ludlow from the CES in Las Vegas. Now, it's worth noting that overnight we saw those all-time highs, but it was done on the S&P 500 without Nvidia. And indeed, if you look at the peak that we saw on Nvidia since October, since then, the broad-based gauge has actually managed those record highs a couple of times without the chip giant. Let's bring in Carol Schleif. She is Chief Market Strategist at BMO Private Wealth for an analysis on the markets. Carol, always good to have you on the show. So we are looking at tech with fine-tooth comb, so to speak. What is your sense of how we should be thinking about things? Because it wasn't just the Nvidia chief who spoke. We heard from the AMD's Lisa Su. They seem to be sounding or giving all the right sound bites on demand. So how should we be thinking about tech going forward?
Well, I think it's important to remember that tech is a significant portion of the market, but as you alluded to in the lead up to this, the markets are broadening out as well. So technology can continue to perform, but hand off some of that leadership to a broader group shared. But we think technology continues in the year ahead. But, you know, investors have come to expect not just beating expectations, but beating them by a mile. So at some point in this year, you would expect that some company disappoints. There might be wobbles in the markets as that leadership broadens out and continues to hand off. But it's important to keep going back to those fundamentals because you've got big major companies generating double-digit revenue growth, double-digit earnings growth, double-digit margins. And so it's really important to keep that focus in mind for a big, broad swath of them.
You talk about this broadening. What are you seeing in terms of the broadening in specific sectors and the size, the market cap that it's going into?
Well, the interesting thing is you are seeing, you know, small caps played towards the end of last year, and there's a lot of optimism there, particularly as the rate cut story plays, because small caps do tend to do better as interest rates come down. But you've also seen, like, for example, one of the best performing sectors in the fourth quarter of last year was healthcare. One of the biggest IPOs of the year was a healthcare IPO. And so as you look at those companies that are able to, there's accelerated FDA approval or pending FDA approval on drug discovery, again, pieces of the healthcare industry. And there's other things going on in technology that's not just AI related, it's robotics related, it's quantum related. We've got stuff in energy and security and lots of other places. And so when you look at the number of sectors that participated in double-digit earnings growth last year, I think it was something like 8 or 9 of the 11 S&P sectors saw really good, solid earnings growth. And for us, a strategist and analyst, we have earnings starting next week and the following week in earnest, so we'll have plenty to dig into.
Just returning to the AI theme and some of the volatility we see. I mean, we were discussing this at the start of the show. You know, we saw a bit of weakness for cooling stocks today, but flash memory doing very, very well. So there's obviously a lot of volatility in this space. I know you talk about how investors should try to use this volatility to their advantage. How do you go about that?
I think a piece of it is number one, recognizing that volatility, that you've seen the discernment, that's a really positive sign too, because one of the most frequent questions we get from investors is this a bubble? Is this like the late 90s? And when you have traditional, everything's in a bubble, everything tends to go one direction, sort of irrespective of the story. So the fact that investors are still very discerning in here makes sense. And so a piece of it is if you have cash on the sidelines or a bonus that came in at the end of the year and you're looking to invest, targeting those sorts of industries or companies or that sort of actively managed ETF that you want to participate in. There's a whole variety of ways to be able to do it, but also recognizing that one sector or one segment just of the U.S. isn't the only way to play these things either, that there's a whole globe of investments that's been doing very well, and actually a lot of international bourses did better than the U.S. markets did last year.
Yeah, with that in mind, how are you balancing your allocations to the US in tech and in Asian markets?
We do tend to be a bit overweight. In our core portfolios, our recommendation is to be a tad overweight, particularly in the U.S. We've also got, as we're actually rolling out a bit different investment strategy this year in terms of having a core portfolio and then having risk diversifiers and ways to play it. So we're in the process of playing some of that. And there's some interesting things where you can get actively managed ETFs of Southeast Asian technology subsectors. And so we'll be looking at a lot of that as the year goes on.
When it comes to hedging risk and diversification, I think gold was a standout play last year. Do you expect it to continue climbing along with stocks then?
Well, it's interesting because gold plays in a lot of places as people's geopolitical hedge, and you definitely saw it with the activities going on over the weekend in Venezuela, and you saw the metals in general appreciate. And so we suspect that's there, but it's also important to remember that gold can go up a lot. It can also come down a lot as well. So understanding why an investor wants to own it, if they're owning it for that psychological fallback, if you will, and that's almost irrespective of where the price is for those investors that are interested in that.
All right, Carol Schleif, Chief Market Strategist at BMO Private Wealth. Thanks so much for joining us today. Now you can catch a special edition of Bloomberg Tech Asia in the next hour. Our team will be live from CES in Las Vegas with Chinese firm Deep Robotics and Samsung's president and CMO, Wanjin Li. That's happening at the times there on your screen. This is Bloomberg.
Bloomberg's been told that President Trump may meet with energy executives at the White House as soon as Thursday as he pushes to reshape Venezuela's oil industry. Let's bring in our Washington correspondent, Tyler Kendall. Hey, Tyler, what do we know? What's the latest on this? Because it does look like the U.S. company Chevron, the one that is being able to export Venezuelan energy for the moment and the only one. How much of this is all benefiting U.S. oil companies?
Right, Avril, you're alluding to this headline here that Chevron's poised to export more Venezuelan oil this month than last month. Chevron's, of course, the only Western firm that is allowed to export Venezuelan crude because it operates under that special license granted by the U.S. Treasury Department, and it's responsible for nearly 25% of the nation's production as it stands. There's a lot that we're going to have to watch evolve in the days and weeks ahead, as this White House has really said that they are taking this vested economic interest in Venezuela's oil production going up. But we know that there's a lot of factors that have to align before we see what is expected to be billions of dollars in investment poured into the country. But at the heart of this is that when you listen to President Trump's rhetoric and messaging around the issue, he often talks about the need to get Venezuela on more solid economic footing before he can talk about setting dates for any potential elections. And it is the lack of details over things like that that has caused our own analysts at Bloomberg Economics to say that there is a heightened risk that we could see a delay in a transition to democracy, because people familiar tell us here at Bloomberg News that this White House has signaled that it feels that the current acting president and, of course, Nicolas Maduro's vice president, Delcy Rodriguez, is somebody that they can work with when it comes to revitalizing Venezuelan oil production. These people outlined to us that she can serve as this bridge between the government and the private sector, and that's clearly top of mind for this administration. Now, as you mentioned, we have heard from President Trump previewing earlier today when addressing House Republicans about how they're going to talk with these oil companies about the future of drilling in Venezuela. We can also confirm that the Energy Secretary, Christopher Wright, Avril and Paul, is set to meet with oil executives later this week. That's likely going to happen on the sidelines of a energy conference that's happening in Miami, Florida.
We need to talk about Greenland as well. Obviously, European leaders not particularly happy with some of the rhetoric coming out of the White House, least of all Denmark, which administers Greenland, talking about threats to the future of the NATO alliance. But, President Trump's not ruling out military force. Marco Rubio seems to be taking a different tack. What are the options on the table here?
Right. So there seems to be perhaps some divide within the administration. But one thing is for sure, the rhetoric has definitely escalated so much to the point that, as you're alluding to, we've seen our European allies really put out this warning to the Trump administration. The Denmark prime minister's statements yesterday were actually a redhead on the Bloomberg terminal. That's how big of an escalation this has been when it comes to the countries. We have to keep in mind Greenland falls under the NATO's collective defense clause. So in theory, that should provide any sort of deterrence against military action there. But still, we've heard President Trump talk about Greenland in a national security sense. We were talking to the former ambassador to Denmark earlier today on Balance of Power, who said that maybe there is a diplomatic route here that could be pursued, the idea of perhaps bolstering defense cooperation agreements between the two countries in a bid to help satisfy the U.S.'s demands when it comes to Greenland, because President Trump likes to talk about how Russia and China have made inroads in and around the Arctic, and also the fact that Greenland does sit on some significant natural resources. About the third largest oil reserves in the Arctic are in Greenland, as well as a huge swath of critical minerals. But much like the story with Venezuela, even when we hear the administration talk about the potential for these natural resources, it's going to take time. There needs to be a building of the infrastructure, a rebuilding rather, and also massive amounts of investment. So to your question and the underlying theme here, perhaps we could see some sort of different cooperation, economic cooperation or defense cooperation, before it escalates to the level that the U.S. military would have to get involved based off of President Trump's rhetoric.
All right, Bloomberg Washington correspondent Tyler Kendall there. We have more ahead on the Asia trade. This is Bloomberg. Nvidia and Siemens are expanding their partnership using AI to transform industrial systems. They plan to launch the first fully AI-driven manufacturing sites this year. Nvidia CEO Jen-Hsun and Siemens CEO Roland Busch spoke with Bloomberg about the collaboration.
We're announcing a big partnership between us. We've known each other for a long time, but the partnership we're announcing is really a big deal. One, we're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI, into their team center and their factory automation operating system. And so we're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
What's the net effect for you, Jen-Hsun? Is it improves margins, efficient capital allocation? I know that might sound a bit dry, but actually right now that's the answer everyone's searching for. How has this investment in AI and use of the technology actually changed things in the real world for me?
Well, we announced yesterday Vera Rubin. It takes 6 different chips to integrate into this incredible system called Vera Rubin. And when you're done, each one of these Vera Rubin GPUs is 240,000 watts. And it is 10 times more energy efficient than the last generation. It is 10 times more cost efficient than the last generation. But it's still, the technology is insanely complicated. 15,000 engineering years came together to build this system. And so when we accelerate EDA tools, when we accelerate simulation tools, and when we can eventually, and I'm hoping very soon, design entire Vera Rubin systems inside a Siemens digital twin, the ability for us to create much, much more complex systems will scale. We'll do it much more efficiently. And so this is really about being able to do the impossible and being able to do it the impossible right the first time.
And let me add, once we then realize that AI creates real-world impact, this is where it really deploys the full power and also the economic power. It's not only in the data centers or in AI factories, which we see, but also on the edge, because once you start inferencing with low latency, you bring this technology to the edge. There's a huge potential for our customers to deploy this technology, and this includes, of course, hardware, where we come from the chips. It goes into the controllers. Some of our controllers run on GPUs,
yes.
And then it goes all the way to the hardware.
Industrial PC.
Exactly.
Yeah.
And we
now these industrial PCs are AI industrial
exactly.
PCs.
We supercharge it, and they can now run algorithms trained in the cloud. They can run it on the shop floor and do all that trick, what we talked about it in real-time optimization and running in a plant, and that makes a huge difference.
Siemens President and CEO Roland Busch and Nvidia CEO Jen-Hsun Huang speaking exclusively with our colleague Ed Ludlow on the sidelines of the CES in Las Vegas. Now staying with tech firms, sources telling Bloomberg that chat app Discord has filed confidentially for an IPO. And this is, of course, the San Francisco-based firm that is popular with gamers as well as programmers. And this adds to the sense of a growing pipeline of VC-backed tech listings. Now, still ahead, China imposes controls on some exports to Japan, intensifying a dispute over Taiwan between Asia's top economies. Details next. This is Bloomberg.
米国、あと中国も
Both the United States and China are still expected to grow by around 4 to 5%. If these two major economies continue to grow solidly, then overall growth should remain resilient. We believe that how the economies of China and the United States evolve going forward will determine the course of the global economy this year, and our outlook is that they will remain reasonably solid.
While we have been concerned about the impact on bookings around the Lunar New Year period, reservations are currently coming in at a pace about 1.5 times higher than last year. In that sense, Japan's tourism industry does not appear to have been significantly affected. However, some impact has been seen in areas that rely heavily on Chinese group tours or Chinese visitors.
Japanese CEO speaking at a gathering in Tokyo on their outlook for the year. Now, China has banned exports to Japan with any military use, intensifying a dispute between Asia's top economies over Prime Minister Takaichi's comments last year on Taiwan. Let's bring in our China correspondent Min Lo in Hong Kong. So, Min, talk to us about what China is doing and the potential impact of this export control on Japan.
Yeah, so the Chinese Commerce Ministry has put out a statement saying that they are going to start banning dual-use items meant for Japanese military use, but also for other end users that contribute to boosting Japan's military. So in terms of the impact, it's going to be a little bit hard to ascertain at this point because it depends a lot on how China interprets the language and how strictly they implement the ban, because if it's only going to affect Japanese military end user, the impact could be quite symbolic and pretty narrow. But if China uses this to also place export controls on civilian companies with the most indirect links to the Japanese military, or to increase the length of the export approval process significantly, that could then have broad-based impact on Japanese supply chain. But if you compare this to what happened in 2010, when China also placed an export ban on rare earths in response to a conflict around the Senkaku Islands at the time, this time around the export controls are much more limited because of the specification that it's meant to target the Japan military. And so a lot will depend on what happens next in terms of the follow-through.
In terms of the follow-through, Min, are we anticipating any retaliation from Japan, and what would the risks of doing so be?
Yeah, the risk is high because you got to remember that China and Japan are so closely intertwined that both countries are able to make significant impact on one another. So when it comes to rare earths, Japan relies on China for 70% of its rare earths as of 2024, and that is a choke point that China has a grasp hold of now. But at the same time, Japan is also China's second export destination, second largest export destination, and third largest source of import as well. And where Japan really dominates is in the semiconductor industry. And if Japan also places its own export control there, it could then really cripple China's chips ambition. And then you got to think about what President Trump does, because Japan and the U.S. are very strong allies. If the U.S. joins in the fray, it could tilt the power balance towards Japan. And if this also sort of scares other countries in the West around potential abuse of Chinese export controls, it could risk alienating the Chinese economy further as well.
In the meantime, the South Korean leader is in China, and the country is getting a very different reception from Beijing.
That's right, and I think it's important to contrast how China is treating Japan and South Korea, because China is clearly showing a willingness to use its economic might to punish countries that goes against the one country principle. And South Korea has gotten a very different reception there, because President Lee Jae-myung had specifically reassured China it's going to respect the one China principle. In exchange, we had seen both countries reviving a long frozen ministerial level economic dialogue that has been frozen since the THAAD missile crisis, and a slew of MOUs being signed. But again, President Lee Jae-myung is walking a very fine line here. He perhaps is seeking to play mediator because he is going to meet with the Prime Minister of Japan next in Nara, Japan. So China will certainly be watching that meeting very closely. It's a tough balancing act that President Lee Jae-myung has to juggle here, and at the same time, South Korea's alliance with the U.S. as well could perhaps put a cap as to how far it could lean towards China, because one thing China has withheld from South Korea so far is the ban on Korean entertainment. China still hasn't lifted that, even though that's something that South Korea has been pushing hard for.
Min Min, thank you so much. Our Bloomberg China correspondent, Min Min Lo. And we'll be tracking any potential market fallout from this latest escalation in China-Japan tensions. We are seeing Nikkei futures pointing to those declines look like could be pretty steep at the open. But this is, of course, after those records already on the Japanese gauges just a day ago, helped along by some of the banking-related shares. Now, aside from that, also keeping tabs on U.S. futures. Overnight, we also saw those fresh record highs, and this was done without the help of the chip giant Nvidia. There looks to be some broadening out when it comes to the rally in U.S. stocks. Meantime, we're hearing from the former New York Fed President Bill Dudley, who says that the U.S. Central Bank faces many challenges this year, from bank supervision to stable coins. But he told us that the chief stress point will be market perceptions over its independence from President Trump.
If the Fed is perceived as losing their independence in monetary policy, financial markets won't like it because they'll be worried that the Fed is going to let inflation get out of hand. If the Fed Reserve basically does what President Trump wants, which is dramatically lower interest rates, the outcome would be higher inflation expectations, a steeper yield curve, higher bond prices, higher bond yields, a real mess. And so the incoming chair has got a difficult problem. He's got to basically keep peace with the central bankers at the Fed and the Fed staff, at the same time not irritate the president too much. That's going to be a very, very difficult channel to walk down safely.
Yeah, absolutely. Situate that desire from the administration, from President Trump, for lower interest rates against what we're actually seeing in the economy, because you also write that, politics aside, the Fed has ample reasons to hold steady here.
Yeah, I think what's happened over the last few months is, one, inflation hasn't gone up as high as people thought due to the pass-through of tariffs. The tariff increases were more modest, and so the peak in inflation is a little bit lower than what people thought. Number two, shelter cost inflation is coming down, and that's likely to continue in 2026. And number three, it looks like the economy is actually picking up momentum. Obviously, we had the government shutdown that's going to distort the fourth quarter. But if you think about easy financial conditions, fiscal policy stimulus, AI investment boom continuing, that all argues the growth side is going to be a bit firmer in 2026. So less worries about inflation, less worries about downside risk to growth. So monetary policy itself will probably be pretty much on hold for much of the year in 2026.
Yeah.
But still plenty of issues for the Fed.
Well, when you say monetary policy might be on hold, are you including the balance sheet and the potential changes or maybe lack of changes to that balance sheet?
Well, the balance sheet right now, the Fed's on a path that basically they're going to expand reserves in line with demand to keep reserves ample, to make sure that there's enough reserves in the banking system to satisfy banks, and so there's not upward pressure on money market rates. We saw some upward pressure on money market rates over the last few months because reserves were starting to get scarce, and that's when the Fed came forward and said we're going to do reserve management purchases of treasuries to ensure that reserves remain ample. Now, the reason why that's an issue for 2026 is some of the incoming candidates for the chair have raised the issue about, well, I really want a smaller balance sheet. Well, you can't have both. You can't have ample reserves and a smaller balance sheet. And if you switch from ample reserves to a smaller balance sheet, that's going to really change how you conduct monetary policy. So that decision about the balance sheet, what that incoming chair wants and on that subject is important, and whether he can get his way is important as well.
Former New York Fed President Bill Dudley there, speaking with our colleagues Romaine Bostick and Katie Greifield. Let's take a look at how metals are tracking at the moment pretty well is the short answer. Take a look at nickel. Huge rally there, almost 9% higher in London. That's the biggest gain we've seen in more than 3 years. This a narrative of supply surplus now turning to supply tightness, and prices hitting a high there. Copper also rallying hard, hitting another fresh record as well. And iron ore, a quiet achiever there, $107 per tonne, just above that level. Unsurprisingly, having a fairly profound impact on some of those big Aussie mining names. Lynas at the moment, the rare earths producer, the best performing stock on the ASX, better by more than 7%. Nickel Industries and Newmont also having a pretty good morning here in Australia. We have more ahead on the Asia trade. This is Bloomberg.
AMD shares slipped on Tuesday as investors brushed off comments from CEO Lisa Su that demand is soaring. Speaking with Bloomberg, she says AI is not just hype and forecast computing power will increase over the next few years.
Let me just give you some numbers to kind of ground what we think the demand environment is looking like. So if you think, today we have about 1 billion active users, and we're ramping that to, 5 billion over the next 5 years, and we have about, let's call it 100 zettaflops of compute, all around the world. I mean, that's just a generic number that aggregates all of that. We think we have to increase compute by another 100 times as you go over the next, 4 or 5 years. And I introduced a term last night, the yottaflop. People are like, what is a yottaflop? A yottaflop is actually 10 to the 24th in terms of flops. So that's a 1 followed by 24 zeros. And to give you, just a view of just how much things have really increased. I mean, that's another 100 times more compute than we have today. So that gives you an idea. Now, you think, what are you going to use all that compute for? I mean, the truth is, the models that we have today are great. I mean, they do amazing things. We talked about a number of use cases. Perhaps one that's hits very close to home is writing software. Like people are using the AI tools right now to significantly enhance the productivity of software developers. But it's good, but it can get so much better. And I mean, I think that's the key point. We like to say that AI is really going to be everywhere, and it's really for everyone. And it's for each one of us to make our businesses more productive, each one of us more productive, going forward. And so we're still in the very early innings of really unlocking the power of AI.
So where we stand is, there's a compute deficit, and software has kind of hit the limits of what current generation compute can offer. Help us understand the bottlenecks and barriers to deploying that compute. A lot at the moment about memory chips. What else? Energy, electricity. What's crossing your desk, Lisa, that gives you pause and say, this is a problem right now?
Well, our job as a technology industry is to push the bleeding edge. I mean, that is our job. And so, when we think about like the MI455 deploying, 2 nanometer and 3 nanometer chips, having the latest generation memory, high bandwidth memory that is out there, and really deploying these big systems, the important thing is that the entire ecosystem come together and we plan together for this, next big inflection in compute.
It's AMD CEO Lisa Su there speaking with Bloomberg Technologies' Ed Ludlow at CES in Las Vegas. Right, let's look ahead to how stocks in Korea might open. We've already got Kospi futures pushing higher by close to 1%. Samsung and SK Hynix also performing well in early trading. It looks like it's going to be another strong day for Korean stocks. Our Asia Stocks reporter Yu-Kyung Lee joins us now with more. So, Yu-Kyung, what are you hearing from investors about the incredible rally we saw in Korea in 2025 and the chances of the story continuing this year?
Yes, good morning. So it seems like there could be no shortage of bullish calls on the South Korean stock market. After the 76% rally in 2025, we are only into 4 trading days of the new year, but the Kospi is already up 7% this year, and it has reached the 4,500 level that it has never seen before. And I think what's driving this growing bullish call is that more investors are catching up with this strong narratives about how great the chip earnings are going to be in South Korea. The 2 of the largest stocks in South Korea are chip makers, Samsung and SK Hynix. And Samsung is reporting preliminary earnings tomorrow for its 4th quarter. And it's just investors are now realizing how great the earnings are going to be tomorrow. Samsung is largely expected to report record earnings thanks to this huge price hikes in this conventional DRAM memory chips, and also is catching up in the AI. So looking at the earnings, some of the investors are expecting earnings to double, and some even bullish estimates are going to see Samsung's earnings going to be triple this year from a year earlier. So this huge earnings growth in chip makers are driving this bullish narrative behind South Korean chip makers and that's South Korean stock market. And that's what we're seeing in this new year.
Is this the year we're going to see Kospi at 5,000? I mean, we're not that far away. And what would this mean for the Korea discount?
Sure. So we're only about 10% away from 5,000. And the reason that people are really intent on seeing whether Kospi can reach 5,000 is because that has been the target that the President Lee Jae-myung has suggested during his campaign last year. And when he first unveiled his Kospi 5,000 campaign in April a year ago, a few people paid attention, but there's more growing expectation that Kospi may hit 5,000 within this year. Some of the more optimistic calls see Kospi hitting 5,000 within the first half of this year. It only has 10% more gain to go. And what would that mean to Korea discount? South Korean stock market is still cheap even after a 76% rally in 2025 compared with other emerging market peers. So if Kospi goes to 5,000, it would not still represent a level that's seen as expensive because of this growing corporate profit. So it would mean that Korea discount will be eased at some level, but it would not ultimately mean that Korea's discount is gone. I think some investors are seeing that when Kospi hits 6,000, that would only put Kospi at around the same similar valuation level as its emerging markets peers.
So it might take a while to actually shake that off. Yu Kyung, thank you so much. Our Asia stocks reporter, Yu Kyung Lee. We'll hear more about Samsung's outlook with their president and CMO, Won-Jin Lee, in the next hour. He'll be joining us in a special edition of Bloomberg Tech Asia, happening at the Times on your screen. Qualcomm CEO Cristiano Amon says robotics is the next big wave for AI. Speaking to us at CES, Amon explained why he believes industrial robots represent the biggest opportunity ahead.
Yes, look, we're incredibly excited about this. This is a new chapter, I think, of the Qualcomm expansion and diversification. I think we're going to robotics. We like robotics a lot because, by definition, it's an edge AI problem to solve, not different than what we did in automotive. You cannot put a server in a robot. You need battery life. You need a lot of integration of sensors. And physical AI is a massive opportunity, and it's an edge AI opportunity. So as we look at this transition of Qualcomm into new industry, we went to automotive, to PC, to industrial, to data center. Now robotics is the next opportunity. We actually have a number of robots here at our booth at CES, demonstrating training, humanoids, industrial. I think we started the year working with some great companies, German, KUKA, Figure AI, and I think it's going to be a great opportunity. In robotics, it's perfect for you to have high-performance computing and low-power connectivity is an edge AI problem, and I think it's going to be the next big wave of AI, physical AI.
How soon is that reality? Already we have robots in manufacturing and industrials, but how soon is it fully autonomous robots? How soon do we start to have the humanoid versions in our houses?
Look, the way we think about this is things that you didn't thought were possible to do with a robot, you can do it right now using AI. I think industrial robot is the largest opportunity that we see in front of us, and it's probably starting as early as 2026. When you use AI to train a robot on one given task, it's a very well-defined problem, and you can do this and you put it into production. Consumer robot, the one that is going to be in your house and do everything for you, it's going to take a little bit of time, but it's going to happen, and it's going to be a big opportunity. I like to do this parallel that we saw with automotive. When we start talking about autonomous cars, a lot of companies went in and said, we're just going to get this full autonomous robotaxi. But until you get there, you can do assisted driving to every car on the road, assuming that the driver is there to pick it up. And we've seen ADAS level 2, level 3, highway autopilot, that's what we're doing. I think the same parallel applies to robotics. First, you have a lot of enterprise in the industrial applications. We see companies, for example, in retail, at night, robot, go to the aisles of the supermarket and restock the shelves. Yeah. Something very simple. That opportunity is happening right now. Over time, we're going to have the domestic robot that will do everything for you.
Qualcomm CEO Cristiano Amon there speaking to Bloomberg Tech's Caroline Hyde in Las Vegas. Just got some breaking news for you. President Trump making some remarks on his Truth Social account. He says he's pleased to announce the interim authorities in Venezuela will be turning over between 30 and 50 million barrels of high-quality sanctioned oil to the United States. That Venezuelan oil will be sold at market price and will be taken by ships and brought to the U.S. and U.S. Gulf Coast refineries are well optimized to handle that heavy crude that comes from Venezuela. So President Trump announcing that 30 to 50 million barrels of sanctioned oil on its way to the United States. We have more ahead on the Asia trade. This is Bloomberg. Let's check in on some of the stocks to watch when trade opens in Korea and Japan shortly. We've got memory chips very much in focus. We did see Sandisk shares surging to an all-time high in New York. That's the biggest jump since February, and it came after Nvidia CEO Jen-Hsun talked up the need for memory and storage in comments at CES. Memory maker Kioxia is one to watch after SMBC Nikko raised its recommendation on the stock to outperform, up from neutral. This is against the backdrop of Japanese futures pointing lower ahead of Wednesday's open. Avril.
Yeah, we are seeing those futures indicating a pretty tepid open after a good showing just a day ago, which was helped along by the material-related names as well as the financial-related stocks in Japan. We're seeing dollar-yen looking pretty flat for the moment. The concern is that the China-Japan dispute will temper any optimism in Japanese stocks. A reminder that our coverage from CES in Las Vegas continues all day. In our next hour, we have a special edition of Bloomberg Tech Asia. Keep it here with us. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. Overnight poll, we saw how U.S. stocks climbed to those fresh highs. This was without the help of Nvidia, so it looks like there still is enough AI optimism to keep things chugging along. And now it looks like it's also broadening out to stuff related to data storage, for example. So it will be interesting to see how this moves the Asia session as well.
Yeah, absolutely. It was a stunning day for Sandisk in particular. It's up 1,000% now from April lows, but we might see some big moves for some of those flash memory names when we get going. But the AI narrative continues to be what's really driving markets in the early part of the year so far.
The concern for the moment, today at least, is this escalation in China-Japan tensions and the extent in which that will temper the optimism surrounding stocks in Japan, which, of course, just a day ago, the rally was really fueled by the material, the financial-related stocks. Tech also, it was a bit mixed, but overall did pretty well. You can see in the early goings, you are seeing that reversal in Japanese stocks. Some think that the rare stocks might move given how China's export controls on Japan might actually squeeze supply of the materials. And we are, of course, watching out for that continued upward pressure on JGB yields. A bit of a reversal for the moment. Yesterday's 10-year passed okay, but we still have the 30-year auction tomorrow to get through. Now let's take a look as well as what we're seeing in South Korea. It was really this rally yesterday led by the chip-related stocks. We spoke to our colleague Yoo Kyung earlier. There are these really bullish bullish calls on the Kospi before the year is through. Maybe we see it not just past 5,000, but a little beyond that as well. Samsung's preliminary earnings are due tomorrow, something to keep watch on. And we are also seeing, of course, the cost deck moving quite flat for the moment. So it's about tech, it's about geopolitics as well in the markets today, Paul.
Yeah, in terms of geopolitics, the oil price is an interesting one to watch. We're pretty much back where we were before the U.S. operation in Venezuela. New York crude right now, 56.45. We did hear from President Trump a little bit earlier saying that shipments of Venezuelan crude are now on their way to U.S. refineries. Let's take a look at some of the bond market action as well. Such as it is, the U.S. 10-year pretty much marooned in that range, just above 4.16% at the moment. That's the yield there. We did get weaker than expected U.S. services PMI a little bit earlier. That did boost rate cut hopes. We're going to get our first clean jobs data reading later on this week since the shutdown at the end of last year. The Fed's Stephen Myron, meanwhile, calling for a 1 percentage point of cuts in 2026. S&P futures, meanwhile, pretty much flat. It was a pretty good day for U.S. stocks. All the major indexes higher. The tale of two tech stories, though. We did have data center cooling stocks hit pretty hard on some remarks from Jen-Hsun about Rubin chips being able to be cooled without water chillers. Flash memory, though, like I mentioned, soaring. Sandisk having an amazing day, up 28% to a record high. All right, joining us now is Naomi Fink, Chief Global Strategist at Amova Asset Management. And Naomi, the tech narrative, as we've been discussing, still very much alive and well and driving markets into 2026. At the same time, though, we do have this story with China restricting export of dual-use technologies to Japan. So what's the more powerful force here for Japanese equities? Is it geopolitics or is it this unstoppable AI story?
Well, I think both are important, and not just for Japanese stocks. I think this is something that we are seeing worldwide, including in the U.S. What we have is a lot of optimism on technology, and there probably will be some associated productivity gains eventually, but it's very hard to time when, and a lot of things can happen in the interim. And meanwhile, we have this environment of uncertainty, and a lot of the geopolitical frictions are part of that uncertainty. So I would anticipate we have a bumpier road than markets are pricing in to get to higher productivity ultimately in the end. I think geopolitical tensions are rife worldwide right now, and the market is kind of shifting them aside. Stock markets are very good at anticipating, at expecting, forming expectations when you have very stable conditions. And so assuming that nothing changes, then we get this huge productivity boom. But I think that assumption is not necessarily safe. We are going to have to look at it as more of a distribution of possible outcomes, and some of those outcomes can be can mean short-term downside.
So, assuming nothing happens, this would be a very brave call. Volatility does seem to be the name of the game at the moment. So with that in mind, how do you allocate?
So what I would be looking for is companies, stocks that are really out of whack when we take a look at fundamentals versus what the market is pricing in. And there are some of those stocks out there. So what I would be doing is not necessarily just heading for the hills and dumping everything. No, I wouldn't do that. What I would do is just underweight those that look most egregiously different from the fundamentals. I would be looking for that potentially to help provide some insurance if we do see some interim moves. Definitely look for value in the long-term productivity. Just be cautious when we see some real differentials between the what theory tells us we should expect in terms of valuation and what the market is pricing in.
When it comes to value, we are seeing that continued climb in Japanese bank financial-related stocks. What are you expecting in the interplay with elevated yields and how that might propel the sector?
Well, I think I expect to see some back and forth for quite some time. As I mentioned from the equity market perspective, I don't think it's a straight line to higher productivity. Japan now does have a very good underlying fundamental story. So I think the trend is going to be upwards. But I don't think we should assume we won't get moves both ways. So I think, for example, if we take the bond market and the rising yields, it's natural that yields normalize as Japan has stepped into a new era of inflation. There's some price discovery going on. I don't think what we're seeing is very unusual, but markets need to adapt to that new normal. So I think we'll see yields rise here. We might see some positives, for example, on that the banks being able to get intra-curve carry, but we might also see some negatives along the line. So I think we will start seeing the picture fill out, some price discovery happen. But as I mentioned, I think the trend is upward, given that Japan rates are rising because Japan is recovering from its lost decades of deflation.
When it comes to deflation also, I guess we have to mention China. There are signs that the economy is starting back to life. How optimistic are you on Chinese shares for 2026?
So I think China still hasn't escaped the duality of its economy of the investment going very well, aside from property, the exports going very well, but domestic demand's still very, very slow. But the government has resolved to address the domestic demand, the consumption. So if we do see the government deliver some measures that really help even out growth in China, I think we can be very positive. But I would expect to some extent that China will be reactive. I don't think that they really want to expend all their dry powder. If we do see a shock, for example, on the external side, then I would expect that as an ideal time for the government to step in and support domestic demand.
Naomi, in the middle of the geopolitical events of the past week, the yuan has quietly strengthened past 7. Where do you see the Chinese currency heading from here, and how would that inform your approach to China?
Well, long term, I think there is significant room for the yuan to strengthen. And I say this because China certainly has benefited until now from a weak yuan. And I look at this in terms of purchasing power parity. In fact, if we look at some measures, like the World Bank's measures of GDP purchasing power parity adjusted, we see a very different picture than in U.S. dollar terms. In U.S. dollar terms, the U.S. is still the largest economy. In purchasing power parity terms, China is. So, what's the difference? It's not just the currency, of course, but the currency has something to do with it. So if there is no benefit to be had from keeping the yuan weak, then there's probably some benefit to be had by inviting greater investment inflows. That is, after all, ultimately how you internationalize a currency, and that has been one of China's long-stated longer-term goals.
Naomi, we'll leave it there for today. Thank you very much for sharing your thoughts with us and shaping up to be already a very interesting 2026. Naomi Fink is Chief Global Strategist at Amova Asset Management. Now let's take a look at how oil prices are faring after the U.S. president said that Venezuela would send the U.S. as much as 50 million barrels of oil, declaring it would be sold with the proceeds to benefit both countries. Bloomberg Steven Stepchinsky joins us now for more. Steve, this is a big call from the U.S. president. Is there a disconnect between what he's saying, the numbers he's throwing out there, and what Venezuela is actually able to do?
Yeah, I mean, listen, this doesn't make a whole lot of sense. I'll put it out there. So I think let's try to break apart what he's saying, right? He's saying 30 to 50 million barrels of oil. Now, let's put that in the context. He's probably talking about assets because Venezuela produces about 800,000 barrels of oil a day right now, but they have about 300 million barrels of reserves, according to themselves. That's what they've reported themselves. And there are some discussions about whether or not that's all correct. So that means that the U.S. would be taking 30 to 50 million barrels of their current reserve. Now, does the 50 million barrels make up currently producing capacity? Is that for them to develop themselves over the next decade? Does it include oil on the water? There are a lot of questions. Now, I think the market reaction, with oil prices down, we saw on the chart on TV right here, that the prices are falling. That's likely due to the expectation that you'll have the folks like Chevron, Exxon, other U.S. companies going into Venezuela to develop those 50 million barrels. But again, he just kind of tweeted this out, right? He just put this on Truth Social, and it's out there, and now the market has to kind of figure out what it means. And I'm on TV right now, less than an hour after he said this, trying to figure it out as well. So there are a lot of unknowns here, but clearly it's having a market reaction.
Yeah, Stephen, definitely more questions than answers here, and I'd like to pose a couple more to you. How economically viable is it to extract Venezuela's heavy crude in an environment of such depressed prices? And also this other line, the U.S. demanding that Venezuela partner exclusively with the U.S. on oil and cut ties with long-term partners China, Iran and Russia. So that sounds a little bit like sovereign overreach?
Yeah, okay, let's go to your first thing first, the first question, which is would Chevron, Exxon, those folks find it economically viable to go into Venezuela right now and start producing and investing? Now, it all depends on what kind of guarantees the U.S. gives them. No, it doesn't make a lot of sense to develop resources in Venezuela when oil prices are in the $50 range for Brent, even lower for WTI. There are probably better, more cost-effective assets in the United States or elsewhere that don't bring with it huge geopolitical risk. Now, the one caveat, of course, is Trump has said that there would be some sort of, they would be able to use government money to help fund this. He said it would, the government would help pay for it. If that is the case, that could maybe entice the Chevrons and the Exxons into Venezuela. Now, looking at the exclusivity between the United States and Venezuela as well, I want to also note, and I think our listeners and viewers understand this. Trump just said this, right? Trump just said something. We haven't heard the Venezuela side yet. So it's unclear whether or not this is an exclusive agreement, if this agreement it actually exists, or if this is something that the Trump administration wants to happen and they're pushing very hard. Now, if I were China or another country, I think, when you talk to analysts, they have ability to find other avenues of developing oil resources. Venezuela makes up less than 1% of global supply of oil production today. It makes up about 4% of China's oil imports. But again, China could find other avenues, and they have been doing that, to kind of replace Venezuela as a relationship evolves with the U.S. kind of strong-arming themselves into the country.
Okay, we'll watch how that actually plays out. As you said, more questions than answers, as is typical these days, I guess. Stephen Stepczynski, great stuff. He leads our Asia energy coverage. Thanks so much. And we have more ahead on the Asia trade. This is Bloomberg.
Hopper pricing is actually going up in the cloud. All of the hoppers are consumed in the cloud, and now spot pricing is starting to go up. And so that tells you about the demand that's being generated all over the world. So H200s, I think, is going to contribute also to that. And I think all told, I think we should have a very good year.
Nvidia CEO Jen-Hsun Huang there speaking at CES in Las Vegas. But as usual, we see some interesting trends around Nvidia's stock price, even though we get some more bullish comments and also some rather exciting revenue predictions as well. The S&P hit a new high, but Nvidia lost a little bit of ground. The company is facing more competition than ever from rivals like AMD, Alphabet, Amazon as well. So the S&P getting there without the tailwind of Nvidia. Well, let's get you now to Las Vegas. We're going to bring in our Asia Trade co-anchor, Sherry Ahn. So, Sherry, you're there in Vegas. What are the highlights of CES so far this year?
Yeah, the tech industry's biggest show of the year underway right now. We are talking about more than 4,000 companies from over 150 countries really taking over the strip, and here, the Las Vegas Convention Center. And it's really interesting because I came here 3 years ago, and the narrative has changed a little bit. We're still very much focused on the artificial intelligence, but this time around, it's really about the convergence between the physical and the digital. In fact, you have an entire hall dedicated to robotics. So one what we can do with humanoid robots and are consumers ready to accept AI-powered ones will be a key question, and CES is a perfect venue to test this. Goldman Sachs thinks that we're ready. They're expecting that the humanoid robot market will achieve about $38 billion by 2038. We have seen Hyundai's Boston Dynamics unit coming out with their Atlas humanoid robot that they can operate in extreme temperatures in their manufacturing plants starting 2028. What I'll be keeping an eye on is any signals for price increases across the tech industry, because of course we continue to see this shortage of memory chips, and what that means in terms of not only gaming laptops, appliances, television sets will be a key question. And I've already talked to Samsung that said they're hiking prices as we speak.
Sherry, when it comes to chips, we got to talk about Nvidia and Jen-Hsun talking in Vegas, sounding really confident about the sustainability of the AI boom. What else did he have to add in terms of the demand optimism?
Yeah, and it's not just Nvidia's Jen-Hsun, right? We heard the same narrative coming from AMD's Lisa Su, who said there's not enough compute power in the world right now for everything that we could possibly do. So from Nvidia, we heard that they are on track to release the Rubin processors that are so much more stronger than the Blackwell, and that they could come for customers like Microsoft in the second half of the year. We were also curious to see what was going on with the China demand and their presence there. And Nvidia's Jen-Hsun says that they are seeing strong demand for the H200 chips, which, of course, were a key question given that we have heard Beijing was discouraging the use of their less powerful H20 chips, for example. Take a listen.
I haven't spoken directly to them, but ultimately, the way they'll communicate to us will be through the companies. If the companies are allowed to buy NVIDIA products in China, then there'll be strong demand.
Of course, CES has always been a battleground for chip designers, also manufacturers, to showcase their latest products. And right now, this year in 2026, we'll be watching how so many of these companies come out with their way to capitalize on this AI trend in every and any product that they can. Back to you guys.
Yeah, Sherry, we'll be counting on you to bring us the latest on this cutting-edge technology. Our Asia Trade co-anchor, Sherry Ann. Now, the top corporate stories we're tracking. Elon Musk's XAI has completed a $20 billion funding round with investors including Nvidia and the Qatar Investment Authority. XAI says the financing will accelerate infrastructure build-out and develop AI products, and that includes its chatbot Grok, which has caused alarm among regulators for allowing users to post images of people undressed by AI without their consent, including children. Universal Music partnering with Nvidia to expand the role of AI in music discovery and creation as record labels look to capitalize on the fast-growing technology. The partnership will focus on using AI to improve how fans discover music and engage with artists. The companies also plan to build on Nvidia's audio language model, Music Flamingo. Now, a reminder that our coverage from CES in Las Vegas continues all day. Later this hour, we have a special edition of Bloomberg Tech Asia featuring interviews with Deep Robotics and Samsung. And later on the China show, we'll speak with the CEOs of TDK and Hesai Technology. More ahead on the Asia trade. This is Bloomberg.
Japan has made a formal protest over China's move to ban exports of items that could have military uses. It's the latest flare-up in diplomatic tensions between the major Asian economies over the Japanese Prime Minister's comments last year on Taiwan. Let's get to our China correspondent Min Min Lo now in Hong Kong. So, Min Min, Japan's asked China to withdraw these measures. Can you tell us about the impact of these export controls?
Yes, this is a major escalation of tensions between the two sides because China has announced that effective immediately, it's going to start banning dual-use items for Japanese military users. And the list is extensive. It covers over 800 items, including electronics, chemicals, technology used in aviation and shipping. And of course, Japan has said that it's opposed to this, calling on China to withdraw those measures. In terms of size and scope, it is more narrow than what happened back in 2010, the last time China had imposed export controls on rare earths, but without specifying that it was only for military users. So this time it is more limited, but again, the language though is a little bit vague. It also says that the export controls could target any end users that help to boost Japanese military. So a lot is going to depend on how the Chinese government interpret it, how strictly or liberally they apply this rule, and it's not clear now whether it is just a symbolic show of retaliation or if it is going to have quite far-reaching impact on Japan's supply chain.
Yeah, so if China doesn't withdraw, what is the risk of retaliation from Japan?
Well, we'll have to see, right, if both sides would come to the table to discuss. Of course, we know that China wants Takaichi to retract her comments, which she hasn't done. In terms of what is in the toolbox of Japan, there is a lot that it can do because remember, China and Japan are close neighbors. Their economies are closely intertwined. Japan is the second largest export destination for China and the third largest source of imports. And where Japan really dominates is in the semiconductor industry. And if Japan places its own export controls in retaliation, that could greatly impact China's own chips ambitions as well. And of course, another big unknown is also how President Trump would react because he would certainly be watching this very closely. The U.S. is a close ally of Japan. If the U.S. joins in the fray, it also could tilt the power balance against China as well.
Min Min, this treatment of Japan by China does stand in rather stark contrast to the reception South Korea's President Lee is getting in China at the moment. Is this classic wedge politics?
Yeah, I mean, you could see this as China perhaps trying to wedge, a difference between Japan and South Korea because President Lee Jae-myung has, of course, in stark contrast to Takaichi, has unequivocally has very clearly reaffirmed China that it is going to stick to that one China principle, and China has then rewarded it by reviving this economic dialogue that has been frozen since the THAAD missile crisis. And so a very clear difference in the treatment that China is giving to Korea and Japan. It's clearly willing to wield its economic might to punish those that goes against the one China principle. But again, President Lee Jae-myung perhaps also trying to fashion himself as a mediator here as he's going to meet with Prime Minister Takaichi in January as well in Nara. And China is certainly going to be watching that meeting very closely.
Min Min, thank you so much. Bloomberg China correspondent Min Min Lo for us. Now, coming up, we have a special edition of Bloomberg Tech Asia live from CES in Las Vegas, featuring interviews with Deep Robotics and Samsung. This is Bloomberg.